Let's bring in Kevin Green, senior markets correspondent, to help set up the action today. KG, it looks like, futures choppy this morning, but it looks like the bulls still have the reins. Why did that Moody's downgrade? Why does it seem to not matter?
Well, it did matter. At the beginning of the session here, we did see, or yesterday, we did see the 10-year as well as the 30-year bonds kind of shoot to the upside. The 30-year got above that 5%, but you started seeing some buyers really kind of stepping in. Maybe there was a perception of attractive yields at that particular level, but we kind of talked about this yesterday. Moody's is the last one to actually make this adjustment. And we were kind of looking at the overall institutional flows. It really wasn't going to probably change the dynamic of treasury demand for very large institutional funds, which is really what we care about. So I think we are kind of discounting the fact that foreign buyers are still going to step in here, and you did see some buyers really stepping in. There's also a little bit of a mechanical thing that's actually happening with the S&P 500 just in general. We are seeing very low volume when you're looking at it on the index scale, and so low volume, it really does not take much to really move prices to the upside or downside. And so you actually could have buyers really stepping in, but if it's not a lot of trades are being done, that's where you can push prices even higher. One thing to just note, we are seeing a little bit of a different mix when it comes to the sector performers. Over the last 4 trading sessions here, you've actually seen consumer staples actually outperforming technology, which is something that you could see maybe on 1 or 2 sessions. But when you start seeing almost a week of that type of behavior, you start to wonder why we are seeing some of that defensive positioning. Is it a broadening out, or is there something else that's on the horizon? And if you kind of go back in time, usually when that does last for around 5 trading sessions, we do have a pullback in the market. And once again, if you look at the S&P 500 composite, so total volume for the S&P 500, it's been declining since Monday of last week. And so that's also kind of signifying the fact that, 1, bears have not been able to step in and really knock this market down, but 2, we are probably seeing a little bit of exhaustion. So low volume can really kind of push prices higher or lower. And I think that's really what you're seeing right now. And we don't have a lot of economic data this week to really push the market around. We just have a lot of Fed speakers, and we're not getting anything that's deviating from Powell's statement that we heard about a week or 2 ago.
So is the volume expected to be low essentially this week?
For now, it is until something actually does hit the tape. But from a technical standpoint, you look at prices, and then volume really kind of confirms price. And so prices continue to move higher, which is obviously a good thing. But if volume starts to decline, it also kind of signifies that we may not have conviction at these levels, at least for now, until we get something once again to give us a little bit more momentum for the market. So lack of earnings, lack of economic data can create this type of environment that we are in. And now it's trading more on a technical basis. When you're looking at the intraday charts, a lot of these setups are really kind of seeing some follow through at key areas of support, which is 5,900 was a key area of support that we defended yesterday, as well as areas of resistance, which was 5,950, 5,960 to the upside here. So in that type of environment, you can still make a decent amount of money, but I would be a little bit cautious at these levels until we start seeing volume and liquidity coming back into the market as prices rise.
Okay, so let me ask you this. We saw a move higher in gold yesterday. Is that, essentially just that safety trade coming back into play, given especially that we have both the Moody's downgrade and kind of a catalyst light week?
Yeah, for gold, there's a couple of things. Technically, it was hitting that 50-day moving average, and that's where a key area for it to bounce off of to continue its primary trend to the upside. So that's one thing, maybe having some buyers really kind of stepping in, those short sellers buying back contracts and pushing prices higher. You also had the dollar moving a little bit lower yesterday, and we're kind of moving a little bit lower here today as well. There is at times, especially right now, an inverse relationship. As the dollar goes down, gold rises in value. And so that's also something that's a little bit more technical. And then, yes, you do have a little bit of that scare with the yields kind of pushing higher yesterday. Flight to quality, if you will, or that safe haven asset being gold is something that probably saw some buyers really kind of stepping in. So I think there's multiple factors that actually has pushed gold to the upside here. But the bounce off that 50-day hasn't been as aggressive as we have seen in the past here. So it seems like the market, for those gold bugs out there, still want to see a little bit of conviction that this trade can continue.
Okay, let's talk about one company we're watching in particular today, and part of the reason for that is we wanted to read through on tariffs and the consumer. Home Depot out with its latest quarterly numbers. The stock is higher in the pre-market. Can you recap some of the numbers here, KG?
Yeah, so we saw revenue actually exceeding the street's expectations, coming in at $39.86 billion. Street was looking around $39.31 billion. The adjusted earnings per share did come up a little bit light, coming in at $3.56. Street was looking for $3.60 here, and they did stick to their full year guidance. Now, obviously, the headline from this earnings report is the fact that they are stating that they are not planning on raising prices due to tariffs at this point in time. They call out the fact that they have diversified their supply chain in general. And actually, if you kind of look at it, 50%, more than 50% of the supply is actually being obtained by Home Depot. Does not have China exposure here. So they do also make mention of that. And they do say that the increase in prices for tariffs, they're going to be able to offset some of that with improved efficiencies within their business, which obviously means, reducing expenses in one way, shape, or form here. And then looking at certain product items that are in high demand and really trying to promote those a little bit more to be able to offset some of these tariffs here. So for now, they did see a little bit of a spike during the spring season, which is good. But obviously, we have this interesting dynamic with yields being higher. Housing market might be slowing here a little bit, and that also might be discouraging individuals from actually renovating their homes. So they are, still seeing some sales pressure just on the grand scale here. You did see U.S. sales growing by around 0.2%, but if you look at comp sales overall, they actually dropped around 0.3%. From what's being reported here. So better than expected. I think the commentary from the conference call gives at least maybe some investors some solace that maybe they're going to be able to kind of weather the storm here. I think it's just kind of a matter of time, though, until we actually see some type of meaningful adjustment when it comes to Home Depot to offset those tariffs, either raising prices, which it says it does not want to do, or reducing expenses. And unfortunately, reduction in expenses can include really the biggest expense that a lot of companies have is labor. So I'm not sure if that's kind of a sign that that's something that they're looking at in the future, but that is something to be on the radar. Expect an announcement probably over the next couple of months if these tariff rates continue. Some methods that they're going to try to reduce expenses with, and I think that's something to be mindful of.
Okay, that's something to pay attention to there. And then before we let you go, KG, the levels you're looking for to the upside and downside on the S&P 500. So we finished at 59.63 yesterday. What are you looking for to the upside and to the downside?
Yeah, to the upside, looking at 6,000 even, and then to the downside, 59.05. That continues to be a key area of support that buyers really step in here. The 6,000 calls right now are gaining a lot of attention to the upside. A lot of calls being sold at that level. We saw that same type of activity about 2 hours into the close yesterday. So about 40 points away from where we're at, 45 points from where we're at right now for the S&P 500.
All right, got it. All right, that's our Kevin Green, Senior Markets Correspondent here on Schwab Network. Thanks, KG.